we are live on Facebook. So I'm going to pull it up on here too. So hello, everybody.
Happy hump day, everybody. It is Wednesday, right?
Yes.
It's easy
So
to forget.
and Michael are celebrating hump day, 4 p.m.
We
happy
are.
hour.
If you haven't tried high noons yet,
Yeah, I haven't tried
good.
that before.
So it's not a seltzer necessarily, but it drinks like a seltzer. My girlfriend turned me onto them. It's vodka and fruit juice, like 100 calories, no added sugar. So there's your free marketing for the day, high noon.
There you go. This is not an ad.
Not an ad, and trusty coffee too.
Oh, you're doing both. Okay.
Yep.
I can only drink coffee in the morning. Then my hands go like this, and then I have to eat lunch to settle down.
Well, good. I'm glad we jumped on this. It's been a while since we've seen each other. I think the last time we saw each other was Gasparilla Music Festival, right?
Yeah. Yep. That was
Which
the last
was
time
only,
I did anything in public.
which I think was only a month ago. But
I know.
Man, does it seem like it was years ago. It's so much has happened in the last 30 days. I think 30 days exactly, actually.
Is it? I can't keep track anymore. Everyone's like, oh, this is day 21. I'm like, how do you do that?
Yeah, making a post every day, I guess.
Yeah. So, well, what have you been doing for the past 30 days and how is business for you? This is kind of, I just want to get to see you again, like find out what's going on in the mortgage world and me in real estate. And hopefully you guys watching out there will tune in with us and kind of comment and what's everybody doing?
Right. What are you doing other than what I'm sure both of us are doing, and that's sitting at home and working from home. I think luckily, I'm not going to speak for you, but for myself, there's quite a bit of work from home in this industry, or work from wherever there's a Wi-Fi connection in a lot of instances. So I feel like my adapting and my change to my routine hasn't been as detrimental as I'm sure it has been to the professionals that go to an office every day and now have to
and commute and drive and
commute, which I'm sure they're grateful for, whether it be 30 minutes saving a day or an hour and a half. But working into that new routine of getting up at a set time, holding yourself accountable in your own home, especially when no one's there or your dog's there, they can do their best to keep you accountable.
That's something I'm struggling with right now.
Yeah, I bet.
Because my wake up times had changed a little bit. They were like really early, like 6. Yeah. And I would wake up and I'd go on a walk with my mom or run with the dog or whatever it is. And that has changed. I'm not going to tell everyone what time I wake up, but I'm definitely working on changing that again and getting into a good healthy groove here with green smoothies and
green juice and walks, I think is the cure to quarantine.
Yes.
Yeah, just keeping a routine and making the most out of the time at home and finding new hobbies, I suppose, with concerts and music and sports kind of on hold for the time being. But what about you? What have you been up to?
House projects and learning technology so that we can do things like this and keep in touch with
I will
clients.
give you all the credit on this. We're working at trying to figure out how to do a Zoom live on Facebook, but I'm sure all of your followers and friends saw your wall that you jazzed up this week, and it looks great.
Yep, thank you. It was
your favorite part of that project?
What was my favorite part?
Yeah.
Rolling. I like rolling the paint on.
Yeah.
I don't like cutting in, and honestly, you can't see it on there in the video, but there's some parts where the blue paint went under the tape and I have to touch up my lines with my baseboards. I'm not too excited about that, but
learning is everything. How many coats did it take?
Two coats to make it like perfect.
It looks great.
Well, thank you.
I did want to ask you about, as I'm sure a lot of the folks viewing this have been invited to and saw, you did something amazing for our local restaurants and places of business. Tell us a little bit about the Facebook public group that you started and how everyone listening and looking can join it.
Yes, thank you so much for bringing that up because I am really excited about it. It's called Tampa Food to Go during COVID-19. And I started it as a public group so that everybody listening and everybody tag them so that we can all keep up with local restaurants, who's open, what times they're open, if they're doing any, like discounts or coupons to bring people in, and just help spread the word of all the local businesses that are open right now. So at first it's a food to go, but I'm kind of wanting to reach out to other businesses that are also open, because I was talking with somebody yesterday, and there's a pottery place in her state, she's in a different state, that is giving the materials to customers. They go home, make their pottery, and they bring it back and they fire it for them. So there's
really
still
cool.
actually companies out there doing their business just in a completely different way. So I'm hoping to get in touch with some, different businesses out there that are more than just food, to kind of just spread the word about what's going on in the area and how we can all help to keep their businesses alive. So
That's
thank you for
fantastic.
bringing that up. So everybody on here, the group is called Tampa Food to Go during COVID-19. And you'll see there, I mean, people are posting like crazy. I think we're over 550 members on there, and I'm hoping to just see it continue to grow.
It's awesome.
Mm-hmm.
A communal feel to it. The pottery place of business puts a new twist on the old take and bake, I guess, right? I guess
yeah.
bring back and bake.
It's interesting, huh? I would have never thought about that.
That's fantastic. And
there's
I just
a lot of
wanted
businesses out there.
to give you
Another one?
on that. Yeah.
Well, thank you. I appreciate that. Cheers.
Cheers, cheers. Woo!
Yes. So tell us a little bit about the mortgage industry and what's going on right now, because a lot of people, we saw all the interest rates drop really low and everyone ran to refi. Those that did and got locked in, lucky ducks, because that's not available anymore, right? So can you kind of fill us in on what's going on with those rates right now?
So it has been, there's two different adjectives, tumultuous, but
that's a big word. You might have to explain that one.
Also fascinating 4 to 6 weeks. So yes, end of February, early March, we saw what we were planning on, and what the industry kind of thought was going to be the beginning of a refinance boom. A window of about 3 to 7-ish days, that seemed like, depending on what direct lender you work for, bank, where they refi rates they dropped. Purchase rates have been relatively stable, but continuing on a downward track. But we saw a refi boom where the industry has a capacity as a whole. So I work for Loan Depot, which is a direct lender, its own investors and its own bank. But then you have some of the other players in the market, whether it's mortgage broker, a local one that takes your loan application and shops it essentially, to your big banks. And each one of those individual entities in a vacuum has their own capacity operations wise, and you have to originate the loan, process it, and then ultimately fulfill it. And collectively, the industry was prepared, but at the same time, I don't think as quickly as all the applications and desires to refinance came through. I don't think the industry was ready capacity-wise. So, seen in the last 3 to 4 weeks with COVID-19 and coronavirus, the volatility in the markets has affected mortgage rates quite a bit. But a lot of it has been trying to guarantee customer service and successful closings, while also, lending to refinances and getting appropriate rates.
And that's what's overwhelming it a bit too, because you're seeing more refis that now appraisers that are working for refis are also working for purchases. So all of it's overwhelmed right now.
The entire system is taxed, that's for sure. And then you throw in rules of not being able to enter some homes, et cetera. But I heard a staggering stat from our CEO, Anthony with Loan Depot, and he said going into this, there was about $11 trillion in outstanding mortgages in the country, with about $7 trillion of them in the money. So what that means is before the coronavirus effects took place, and why the refi boom kind of came and went, but came and took off so quickly, was the American consumer has never had, on average, a higher credit score. And with rising property values, there's never been as much equity. Homeowners haven't had as much equity in their home. Couple those two things together, and a drop in interest rates, and voila, you have 2/3, 3/4 of your outstanding mortgages, what we call in the money, to refinance. So we will get to everybody. I'm not a fortune teller.
I wish we had a crystal ball,
anything like that. But I would expect rates to ease out here and continue where we are, with the opportunity for more folks to get back to work if they're currently laid off or what have you. But the opportunity to refinance, from my standpoint, should be there through the year.
Okay, that's good. And just buying rates in general, even if you're not refinancing, like we like to work with first-time home buyers a lot, but any home buyer right now, the rates are still good for them, right?
They are very good. Been quoting for conventional 3.5 or less with minimum down, and FHA is in the same neighborhood. So
that's great.
Interest rate wise,
I mean, shoot, I just purchased in the end of August last year at 4%, and the rates are still lower right now to buy. And I haven't seen prices shoot up. I haven't seen prices go way down. Like, we're still in a really good spot right now where things are affordable and you got a good interest rate. So with a low interest rate, you can afford more house-wise, which is really great for people right now. So one of our mutual clients that we're working together, I did a Zoom call like this with her today. We went through the MLS. What do you like? What don't you like? What areas do you like? And it was great doing it with her. And she's like, well, my lease is still up, so why not? And I was like,
that's right.
Exactly. I mean, the rates are still great and there's still inventory, so why not?
Rates are great. What are you seeing on your end from the actual fun part of purchasing a home?
The fun part. Sometimes.
What are you seeing from a market standpoint? And then we'll circle back on the Zoom call that you had yesterday. I'd like to hear more about that.
Yeah, no, I mean, houses are still coming on the market. I did a virtual listing appointment with someone the other day. So it was a preview, really. They weren't actually ready to put their house on the market until maybe May or June of this year, even before all of this started. But we went on FaceTime and he just went through his house and showed me, hey, these are the updates I did. What do you think I need to do to prep my house to get ready to sell? And so it was weird because I wasn't there with him in person, but the fact that we got to do it virtually was just as great. I could say, wait, stop there. Let me see that again. And so that aspect of it all being tech is awesome.
That's very
I'm still doing listings. People are still calling for pricing analysis. I've still got buyers interested, like, hey, what's the market doing? Is now a good time to buy? What's going on? I've done a few virtual showings where I go to the house, and I've got a gimbal, so I like to keep things stable. But I videoed 6 properties the other day and added all of the videos to Google Drive, and then shared it with the client, and they got to do walkthrough videos for the properties that they were interested in. So it's kind of neat. It's fantastic. A really different way of doing things, but it's fun that we are able to do that.
Change can be fun, and it's from a distance. You've definitely kind of attacked the change, and it sounds like you're making the most out of it. What was some of the feedback that you've gotten from both the potential clients on the listing side and the buyers that you were working with as well?
Yeah, the listing side, they thought it was cool. They're like, well, thanks for doing this really weird thing with me. It's like, yeah, no problem. This is great. And on the buyer side, they love the videos. They're like, oh my God, I felt like I was in the house. Like, thank you for taking the time to go do that. Because they're actually out of state. So it wasn't just something I could meet them in person for. Right. And then I've got another client who has little kids. So she couldn't just leave in the middle of the day to go show properties. So it was nice for me to go virtually kind of show her around and FaceTime. So I'm getting good feedback from what's going on so far.
Full suite. That's the definition of a car, I guess, when you got new variables introduced and you are attacking them head on. So that's awesome.
Yeah, it's fun.
What about prices? What have you seen from a price standpoint?
So someone on Facebook, I saw her, she did a little market watch, which was really interesting. So I went on to my MLS and did it. I am seeing a few price reductions going on in the market right now. And I think that's because sellers maybe are not getting as many showings as they were before. So they think that dropping the price is maybe going to bring some more people in. I don't know if it's really time to start dropping prices yet, though. I think this is all just a little funky. People are getting into this new groove. I kind of think that buyer confidence might start increasing over the next couple of weeks. So I would hope that prices aren't just going to dive down to bring people in, because I don't think that's the problem. I think there's just like a pause. Everybody's a little like, what's going on out there? And then it'll all kind of reset. I've seen some temporarily off markets or maybe withdrawn from the market to be put back on later. But for the most part, there's still new listings coming on every day. I think it's a per seller type of situation. You know, some people just aren't comfortable with strangers coming into their house because you don't know what they're touching or what they're doing. And then other sellers are like, yeah, come on in, come to my house. What coronavirus? I'm like, what? You guys are crazy. But awesome. Yeah, so I think per seller, there are just changes, and we're just kind of taking it one day at a time at this point. Cool. Figuring it all out.
Awesome. And, you know, you talked quite a bit about standing, just the set of potential home buyers going into what we in the industry kind of call hot season, with the school year wrapping up, going into summer vacation is when a lot of families look to sell. And
right. This is the spring selling season, right?
Right. And, you know, COVID-19 is kind of, it's you used something with me that resonated, and it's a health crisis and not a real estate crisis necessarily.
Right.
And I wanted to bring that up so that you could share with the viewers kind of what you mean by that, and maybe settle some nerves.
Yeah, absolutely. So, and what I mean by it being a health crisis and not a real estate crisis is that the prices didn't drop. All of this stuff about us staying home isn't happening because there's bad things happening in real estate. And I'm not well versed in the stock market, but I know that when the stock market drops, it doesn't mean that real estate prices are going down at the same rate. So I think real estate is still a safe investment, and I think those two things don't correlate. So I don't know. I don't think this is a real estate crisis at all. And if anything, people are now in their homes all day long with their family, and they're like, whoa, you're getting a little close. Scoot over.
A little close. We need next quarantine. Hopefully we don't have one. But next quarantine, we need some more space, right?
Right. So I think that there is going to be some sort of pent up demand where people are going to be like, wow, I had to move before this. Now it's time. Like, we really got to make some changes here. And with the rates still being good, it's kind of like, why not? This is still a good time. So I think when all the dust settles and people get into this new routine, it's going to be like, oh yeah, I remember that I wanted to buy a house, and then we're just going to be flooded. And we're ready for it. We are prepping myself to get ready for all this business, because I think there's a pent up demand for it, not only for real estate, but for going out to restaurants or going to the mall and trying clothes on, or like literally anything. People are going to be like, let's go.
Yep, we're going to see Riverwalk lose all the people walking on it, and all the stores are eventually going to be flooded with consumers again, and hopefully in the near future with minimal loss.
I hope so. And so that's one of the things I did here. I don't want to like bring it down, but for those people that are going through situations where you were a server at a restaurant, or were in some sort of service industry like that, and you were under contract to purchase a house, and then the lenders pull your financials right before closing and everything's not the way that it was before. That's reality right now, and that's what's going on. But hang in there, because hopefully we can bring it back, right, and still find you a house later. So what are you seeing on your end with that? Because I haven't had deals cancel personally because of this. People are still closing on my end, but with you, what's going on over there?
So I as well haven't had any deals fall out or cancel because of it. But I know that for my organization and my processing team before really the main piece before closing. They'll do a soft pull your credit just to make sure you didn't open any new trade lines. But the other piece is a verbal verification of employment in most cases. So obviously, if you're in the service industry or manufacturing or what have you, you were, laid off or riffed or put on hold for the time being, that can be in a lot of cases what the deal killer or the deal pause piece ends up being. The flip side to that.
And does it become a pause? Is that something where we could extend the contract until we get back into this? Or is this a nope, you can't get financing situation? What are we looking at?
So that is a great question. It's going to be a case by case basis. Obviously, there's a lot of different parties in a transaction, especially getting that close to closing. So that the seller is the listing agent, you as the buyer's agent, and then there is the opportunity to extend that. But I'm not going to speak for each.
Right, if the seller can't extend and has to move somewhere.
Mm-hmm. Right. But actually, what we've seen in the industry as a whole, a few of my colleagues and I have discussed lovely Zoom meeting like this. More free advertising for Zoom. There you go.
Yeah, well, we gotta buy stock in something.
Yeah. What we've seen is a lot of cuts in employers or corporations in the country. Some of the cuts have actually been to administration, some of the support staff in administration, and actually the folks that handle a lot of verbal verifications of employment. So there's been a lot of phone calls and requests that have gone, kind of unfulfilled or answered for these final VOEs. And depending on, what loan product, which lender you work for, and what the guidelines say, that they have enacted a few things to, okay, you made the effort to look at the verification of employment, they didn't get back to you, et cetera, and still allow you to move forward with the deal. So really all I can recommend is patience, and just every avenue will be explored. Exactly, just patience, and we'll see what happens in the next few weeks here.
Yeah, this is crazy, this whole next few weeks. I'm hoping that it starts to stable out like this and people are like, okay, let's just start figuring things out. Like, we're in this now, where before it's like, oh, when is this going to end? Oh, it'll be over soon. Now we're like all settled in. We're like, okay, we got it. Like, we figured it out. We're going to be here for a while. So let's
and we've actually
find a best way to deal with it.
From a rate standpoint, this may be a deeper dive than anyone that's watching or viewing would care to go. But so, a while back, probably 3-4 weeks ago now, actually, about a month ago, the Fed cut interest rates to 0. Probably 7 or 8 phone calls from folks that were both locked for refinance and that were looking to cash in their 0% interest rate refi, and walking them through how that's not a direct correlation with mortgage rates. So when the slashes consumer interest rates to 0%, what that did is it allowed the banks to borrow money from the Fed or the Treasury at a 0% interest rate, meaning they have cash available to lend, trying to encourage consumer spending by way of credit, so giving consumers lines of credit. So what we saw in the mortgage industry is mortgage rates did go down a bit. However, our biggest indicator, a lot of folks will track the 10-year yield, the U.S. 10-year yield, which is an okay barometer, but the main driving component for mortgage interest rates, residential anyways, are what are called mortgage-backed securities or mortgage coupons, which were as volatile as Dow Jones and the S&P 500 and bonds were for a few weeks there. Now some of the other easing and some of the other legislation that the Fed's kind of put through and committed to is they are purchasing daily a certain amount of mortgage-backed securities, which has helped stabilize rates for the last 7 to 10 days. We haven't seen a huge spread in rates, and that we haven't seen a huge spread in coupons being up or down. So that's kind of a high level yet detailed explanation of why rates have stabilized a little bit from what we've seen.
Okay. That's good. I like that.
Some of the things that are being done economically behind the scenes that are manipulating, for lack of a better word, kind of where we are.
This is why I like you, because you know all this stuff.
Well, thank you.
And you can fill everybody in, and you're always up to date, knowledgeable. So I appreciate that about you.
Thank you.
So thank you for explaining what's going on, because I think that helps consumer confidence too. When we the two of us as professionals can actually talk about what is happening and why, and I think that's important. So
absolutely. And so I guess the layman's terms of that message is the government is working to stabilize, and as we've seen in the stock market, a little bit of a rally of late, but from the mortgage interest rate standpoint, we've been relatively flat for
good
a few days here. So every extra day is a longer streak, and I think the officials were talking about light at the end of the tunnel earlier this week. So again,
good. I like it. I think a light is coming.
Yeah.
Oh, I also wanted to talk about appraisers and how are appraisers doing their job right now? Because I've heard that they are doing drive-by appraisals. Is that true? Are some going in the houses? How's that working?
Great question. So from my standpoint, another 411, your lender, whether it's me or John Doe down the street, we are kept out of who the appraiser is and any contact with the appraiser until they've finished their job. So when we get updates, we're contacting the management company that the appraisers actually work for. But this past week, I have had one. Well, there's been 3 different appraisal situations or scenarios in my last 3 deals, actually. So the first was a refinance, and very strong borrower, greater than 20% equity in the home with the refinance, and they actually had their appraisal waived. So some of the Loan Depot bells and whistles that are very good for the consumers, they can save money on an appraisal based on their credit profile, their consumer profile, which we have with their application, and then also market algorithms and where the house is, what it's priced at. We are able to waive a good amount of appraisals with greater than 20% equity in the home on a refi. So that's one instance that we stripped the appraiser out, actually.
Yeah. Interesting. And that's not something that would have been common before this, or, well, I know that you do have situations where we can have appraisals waived before COVID-19 and all this, but are you think that's going to be more common now?
I think it's going to continue on the same trajectory that it was with, I haven't seen any more or less since COVID-19, but in a lot, especially in the refi market, it's going to be hopefully the way of the future.
Hopefully.
The other scenario that we had was a purchase. It was a purchase, and it was an empty home. So the appraiser did a full appraisal inspection within the home. And then recent was a drive-by where the folks were still residing in the home, and the appraiser and or the sellers weren't comfortable with the actual appraisal being done inside the home. So
interesting.
I've resorted to drive-bys. I think with residents still living in the occupied property, from what I've gathered, most appraisers and appraisal management companies are erring on the side of caution, which I think is the right and noble thing to do. But if that house is empty, there's a good chance that it's going to go through a full inspection.
Gotcha. Wow, that's interesting. So again, it's per case-by-case basis right now for
it really has been. There's company memos sent out morning and night with different adaptations, different ideas, different things to clear conditions. Just kind of adapt is really the word that I've used over and over again the last couple of weeks, and continue to do. adapt and be flexible. Things are going to take a little bit longer than they have been, but we're still closing and funding loans, and you're still listing.
They're still closing
real estate, so it's still going on. It's just
a matter of how.
out of the situation, correct?
Yeah, this is all a little different. Interesting. What else did I have that I wanted to talk about in here? Mobile notaries going for closings. So I know that doesn't really have a lot to do with the lending side of things, but at closings now, where you're one of the lenders that would show up at closing. So obviously we're not doing that really anymore. Although I did have a closing a week and a half ago, and I was there, and my seller gave me a hug, and I was like, wait.
wait.
But no, yeah, so I was there in person, but maybe that'll start slowing down now. But title companies are sending mobile notaries to the person's house. So that's interesting too.
It is. And it's
what about e-signings with closings with you guys? Do you have any updates on that?
So e-sign, even before this, we have what was called a hybrid e-sign. So by law, there's certain documents in a closing package that cannot be e-signed. So those are going to be
wet
ticket items. Yeah, your wet signatures, closing disclosure, mortgage, a few other documents as well that have to be wet signed. But with the hybrid e-close, we are able to, it was only within 24 hours. It has now been upped to 72 hours, where if the closing package is ready, it can be sent to the buyer, and they can come in and e-sign, go through, look at every document, whether it's an e-sign or wet sign, but they can go through and execute an e-signature on the vast majority of the closing package. I'd say on average about 2/3, depending on if it's a government loan or a conventional loan. And then those executed e-sign documents are sent to the title company the morning of. They print those out, and your 45 to 60 minute close is now down to 20 to 30 minutes. So
that's crazy. And in a mobile location where you don't even have to drive to the title company. So you're saving, say you drive 30 minutes to the title company, then you sit there for an hour, and then you drive 30 minutes back. We just went from an hour and a half to 20 minutes, period.
To 20, 30 minutes. Yeah. It's pretty exciting stuff. And I personally, each loan officer has their own choice within Loan Depot, but I've been doing that on every transaction. There's no pressure sitting at the table to read through these documents that people might, make up in their mind.
Some people want to read through them, but they're feeling anxious over someone watching them. So this kind of gives you the freedom. Not that you can change any of the documents, but
well, you can
at least you can read them.
Cost you a lot of money, right?
Yeah. So that's pretty great. And from a real estate standpoint, we too have the ability to e-sign all of our documents. So even if we do have a virtual showing and you like the house, and then you sign your documents electronically, and then your appraiser comes and does a drive-by appraisal, and then all the lender docs get signed, and then it's crazy. Nowadays, we can do a transaction and you literally don't have to be physically with someone until that mobile notary needs you to wet sign something, maybe a couple pages at the end. That's crazy.
Right.
It's kind of fun.
It is,
to be
it is
in
fun.
this all-changing environment.
Pressure's on us to keep it personable, though, through means of
very much.
This and
that's what I love about this. This is way better than having a phone call with you and catching up. Like, more than half of the communication comes from your facial expression. So to be able to do this with clients it's amazing.
Did you really like that house, or did you just
I got that text, I like it, but I didn't see your face. So
where's the context with that? Was it I like it, or
I like it? Right? You don't know. So this is
valuable.
Pretty great.
Context is valuable for sure.
And Zoom is mobile and laptops, and
FaceTime,
you don't have an
and
iPhone,
all the other bells and
FaceTime,
whistles, right?
Yeah, it's fantastic.
So I have to ask, are you taking your Lysol wipes and masks with you when you are going to actual homes?
I am. Yep. I've got my Lysol wipes in my car, and I take them, and if I'm touching door handles or light switches, I literally keep it in my hand at all times, and I'm wiping stuff down.
Awesome.
So,
awesome.
Yep.
Good.
Even if I'm videoing and nobody's in there with me, I bring my Lysol wipes. So I go in and I video, and then to turn off all the lights, I have got my Clorox wipe, and I'm wiping everything down. So it's just the new normal, I guess.
It is.
Mm-hmm.
Do you have one of the fancy masks that have like a printed pattern on it that says
I do not have a
Jess
mask
on it?
yet. I will be honest, I don't have a mask yet, but it's looking like I'm gonna need one. So
Yep.
I've seen how they make all the bandanas with the rubber bands.
Yep.
I have a bandana, so maybe that's an option for me.
Get your sister to print your C21 Jess logo onto it, so it just looks like
That's a good idea.
you go with the sunglasses, right?
Oh yeah, I'm gonna walk in with C21 Jess sunglasses and a face mask, and it's just like full branding.
Anyone asks who you are, you literally just have to point.
It's just like, check it.
Yep. Yeah, check it.
That's awesome.
One of the
Michael, this
last
is
things,
awesome. Yeah, what do you have for me? What else do you got?
One of the last things I wanted to touch on that's kind of the buzzword this week, towards the end of last week into this week, was mortgage forbearance. So,
thank you for bringing this up. I'm really glad. This was at the top of my page and I didn't have it. So yeah, let's talk about mortgage forbearance and the truth behind it.
Yep. So I am what they call a loan originator. Depending on the lender, Loan Depot does service a vast majority of their loans. But the actual act of holding the loan or servicing the loan is done by a lot of big banks. There are a few other common servicers that people watching might have, like Mr. Cooper's or UHC. I think United Wholesale is a big. But what they're doing
that's who mine's through, United Wholesale Mortgage.
Yeah. Forbearance. There's been pressure from the servicers to the housing officials to come up with some help on the servicers' end, because they felt the pressure of, hey, we want mortgage forbearance. Servicing isn't my expertise. I don't service loans. I know how the process works. I know a bit about it. But my cautionary advice is to read all the fine print that comes with it. Phone call, see what options are available to you. But when they send you the information, make sure you read it carefully and clearly. There are some scenarios where they just tack it on to the end of the mortgage. There are some where your 3 months is up and you make the lump sum payment of what you.
And on that fourth month, you owe 3 months of mortgage plus your fourth. So it's all at one time, which is terrifying.
Make sure that they don't report anything derogatory to the credit bureau. You don't want to affect your ability to finance a home in the near future if life takes you in a different direction. You just watch closely, ask about how the interest is going to be accrued on it. Just ask the right questions, and I'm happy to walk through that with anyone over the phone. Things to ask, make sure that they aren't being taken for a ride and otherwise already
do our due diligence really well and ask industry professionals that you know to help you out.
Right. So definitely something that everyone should at least look at, or if they have interest in taking advantage of it, just make sure they do their due diligence on it.
That's really good. Thank you for bringing that up, because I know that's a big question that we have right now is what happens if I can't pay my mortgage or things like that. So definitely read the fine print, because it can be a blessing or it can kind of come back and hurt you in a couple months. Yep. Exactly. So there's a lot of options, a lot of change, a lot going on right now, but we're here for all of you guys. And Michael, I got your back and I know you've got mine. So we'll just kind of walk through this time together.
Yep. That's all we can do. And again, keep adapting and have a positive outlook, and we will get through this, and make sure you're supporting your local businesses through the COVID-19 page that you set up. And
make sure to post in there. And I'm also going to be reaching out to some other businesses. So if you guys watching know anybody who has a local business and is still in business right now, still doing things, please share it with me. I'd love to get them on a Zoom call and kind of spread the word to everybody that what they're doing in their businesses and how they're staying afloat. So we're here to help, right?
We have everyone's back, right?
Yeah, that's it. So I'm really glad that you took the time to do this with me today, Michael. I think this is important for everybody, and just kind of keep in touch and keep the positivity alive, like you said. And that's what we're here for.
Thank you for having me. It was an honor, and it's always good to catch up. And it's crazy how fast a month can go. I know
we normally do this at Buddy Brew in Hyde Park,
right,
but
right. We usually
we
have
can't go there
a weekly
right
or
now.
bi-weekly catch up, but it's been phone and text message until this point, and
yeah,
look forward to hopefully only a couple more Zoom meetings with you. Hopefully we're back to public occurrence, but
yep.
most of it since then.
Well, that's awesome. Thank you, Michael, for tuning in, and thank you guys for watching. And if you guys have any questions about anything, just let us know, and we're here to help. So thank you again, Michael.
That's
right. It was
right.
good to see you.
Thank you, Jess.
Have a great day.
You too. Thanks, guys.
Thanks. Bye.
Bye.